What's going on, everybody? It's Wednesday, September 21st, 2022, Daily Log, episode 14. Today, we're going to cover FOMC and what happened. I talked about yesterday, especially Monday as well, stay out. There wasn't anything in here that I would have participated in. I will go over a couple short setups. Overall, it actually was a really nice model, but just because of the news, just because of volatility, I advise to stay away. So does ICT. It's overall the smartest move. I said to wait from Monday, wait till Thursday. So tomorrow we might start getting some maybe cleaner price action where we can find some small setups. So looking over the day, honestly coming into today, I know I talked about last night how it's quite neutral. Honestly, I was looking for bearish prices. There's no reason for this to go higher. My overall buy side liquidity target never got met, which was that 39.64, and even the previous day high didn't even get taken out. There was a really nice SMT divergence that you could observe during the news event. So US 500 or ES made the higher low, NASDAQ made the higher high, and then US 30 or Dow made the higher low as well. So that's a bearish SMT divergence signature. So that was really cool to see. Looking at, let's go down to 1 hour. So we traded back into a small fair value gap here. And if you look at the 15-minute, we took out the sell stops right away, rallied the other way, and then ICT posted today a couple of nice short setups that he participated in. And that's something that, it's something for your log. You don't have to participate in that. Don't feel like, just because he got in there doesn't mean you had to be participating in that. Okay, so looking at the 15-minute, we trade back into this fair value gap. I'm not saying that I would even have known that during that time period, but cool to see price tap into that. Definitely going to log that away. Leading up into FOMC, see how price is just so stale, slow, no real volatility. It's just building liquidity on either side of the marketplace for retail traders. Basically just get clapped out of the market. So looking at the 5-minute, went ahead, took out sell stops, rallied the other way, took out buy side liquidity. So we have the resting sell stop or buy stops here. Trade back into that 15-minute fair value gap, made the divergence bearish. Looking at a 2-minute or even a 1-minute. After we ran out the buy stops, we had a displacement lower. So we had buy stops ran here. We had the market structure shift here after we got underneath this low. We had the sell side liquidity resting here. Return back into this fair value gap here. Reasoning why you wouldn't enter into this one is because you're looking for a premium relative from dealing range high down to the dealing range low. So you're looking at a fair value gap inside of a premium. Dips back into that fair value gap. There was a nice fair value gap and pretty nice displacement here. So fair value gap here. To me, I would rather wait for price to react off of this than enter into here. This is the highest probability. There was the second fair value gap here. Traced back into it and then displaced lower. And ultimately took out the sell side liquidity. If you look at this entire thing, it's a market maker sell model, original consolidation, accumulation, guaranteed on lower time frames. There might be a reaccumulation stage, smart money reversal, first stage, second stage, and then we finally get underneath the sell side liquidity, the relative equal lows resting underneath here. And we have just been fading away ever since the open of today's candle. So it's very interesting to see how price played out today. It definitely gives you a sentiment of what is really underlying here. It is quite fascinating and pretty scary for people like my parents or anybody out there that, has worked their entire lives to save up for a 401k and put their money away inside of these stocks. and they're waiting for retirement, and their entire retirement is kind of fading away as they watch. I won't be surprised in the next few months here if we really start visiting some really lower prices. There's nothing remotely bullish about this at all. I really do think we're going to see something like 2020 happen where we have a flash crash over, a span of a month or maybe 2 months where we really see 100, if not 1,000 point moves lower. Uh, so definitely be careful. Doesn't mean you can't make money or there isn't moves or the algorithm stopped working. It just means to be very careful. Price can, wash you out in a second. What I'd be aiming towards, I know I've talked about the sell side liquidity on the weekly time frame resting at 3060 3631. I talked about that on the weekly review. That's the overall target on the weekly time frame for us. Looking at even lower prices, I see a fair value gap here to here coupled with the order block, these two down close candles here. That would be the next overall draw on liquidity for me. And once we reach there, that's a point of interest. I'd like to see how price reacts to it. It'd be nice to get a nice retracement off of this. I really would enjoy price not just dropping hundreds of points, if not thousands. That would be great if we got some nice retracements into premiums and then going lower. But looking at this, it's quite obvious where we're heading. So my next target is 3722, and then the weekly target 3636 is the overall target. Underneath that, once we reach there, then I'll start annotating some other areas of interest. You can go into your own daily chart. I see a fair value gap right where the weekly order block is. Annotate that, annotate the weekly down close candles. We have some relative equal lows resting here. So that's just something you get prepared for. We are going to reach down in that area sooner or later here. Seeing how price is just moving very, very quick with a lot of speed, especially after the open. I'm not saying that by the end of the week we're going to reach down here. I highly doubt that. Maybe by the end of the week we could reach underneath this low. I did talk about watching the equilibrium of this wick here. So I'm just watching price. I'll see in the morning how we reacted off of that. But what would be really nice to see for at least this week is potentially grabbing the sell stops underneath this low and then giving us that nice retracement. Seeing how we opened doesn't give me the best clarity for tomorrow. So I'm going to be very wary of tomorrow's price action. Do remember after large range days, we can see consolidation or sideways movement. So that's something to be aware of. Wasn't the largest, range day compared to like a CPI number that happened last week, but it is pretty large ranged. I believe we moved, 150 points, pretty significant. So be wary of that. I'm going to be looking at possible bullish retracements, if not just continuation of bearish prices. So I'll update in the morning, maybe on the community tab, what I'm looking at, if anything. But until tomorrow, good luck and good trading.